Hello again, this is Robert Schein, Managing Director and Partner with Blanke, Schein Wealth Management. Well, today is May 6, 2020. Three topics I'd like to discuss. Number one, states are reopening. Number two, high frequency data. What we're looking at Blanke, Schein Wealth Management as relates to managing our clients' assets, their portfolios, and overall economic health, if you will, what that actually means. And finally, a good story from years past, and sort of a great memory called Woodstock, if you will. So we're going to discuss a lot. Thanks for listening. So first topic of the day, markets, and what traders are watching, what markets are observing, is a common theme that we're discussing is, the states are reopening. Some states faster than others, and some states, who haven't been hit by the coronavirus as much are sort of ahead of the reopening status, if you will, across the United States. This is going to be critical, right? As businesses reopen, they're going to look to restaff and hopefully rehire, if not keep their employees, engaged. And the unknown going forward, as we know, is going to be the traffic level from every aspect of the economy. So as states reopen, it's important. But one thing we do know is that the unemployment rate is increasing and the total number of claims is increasing. One of the data points that we're getting right now that I want to keep a look at is that the continuing claims, that's an important number because those that have initially claimed are now on unemployment. Will that number continue, or will it sort of subside, if you will? And the only reason why that would subside is if the PPP program, the Paycheck Protection Program, by the government assistance through the small businesses have granted the loans to small business owners. And essentially it's a grant that will convert into a loan if it's not used for rehiring those employees or retaining those employees in sort of an 8-week period of time. So we're seeing some improvement here on the continuing claims part, which indicates to us that there is incremental progress as it relates to the government assistance program. So that's a net positive right now. We'll continue to watch that going forward. So the next topic is a really important one as it relates to the economy itself. I just discussed unemployment. Unemployment, oftentimes, especially in the world of economists, is a rear view mirror indicator of future potential for the economy, because it's ultimately even when the data that comes out from the government as they report it, it's a lag effect. There is actually a lag effect from from when that information gets from real time to when it actually gets reported. So what do we do as we manage portfolios going forward is what we look to high frequency data, which are government indicators that are published daily, even weekly. What do we mean by that? Well, let's discuss. So high frequency data essentially looks at the economy in real time, and what they report on various different websites. We have a resource here with our partners at First Trust that give us weekly and daily updates on a collection of high frequency data. And essentially what that is indicating that the economy is showing us real-time green shoots. Let me give you an example. Railways, so rail carts that are moving back and forth. Week over week, we see an uptick in that indicator. We even see box office sales, so those box office receipts that are reported weekly. There's an uptick in people actually attending theaters, believe it or not in California, but other parts of the country. There's also several others. Another big one that we're watching is hotel occupancy. So there is a week over week uptick in hotel occupancy across the United States. And these are numbers that are reported. There's also indicators from Airbnb and a few others that show us, that there's an uptick in people actually moving about, so the economy. Another indicator is gas. Gas is up, believe it or not, on a consumption basis, week over week, 10%. Now, you and I may not be driving, if at all, but across the United States, that's an indication that, there is consumption and there is that demand for it, and there is an indicator that we use from high frequency data that shows that there's green shoots. Another one I want to talk about is Open Table. Open Table looks at all the restaurants across the United States. And believe it or not, there are some restaurants in some pockets of America that are allowing social distancing in the restaurant and opening the restaurant in a very measured, thoughtful process. But Open Table looks at the indication of those that are actually booking and actually attending in those restaurants, and that's actually up week over week. Now, keep in mind, this information has to be taken with a grain of salt, right? Because we've come down from such a great number to such a great low. So any bounce is obviously in a welcome bounce, even if it's small in nature. But to see sort of those 3 or 4 and 5 aspects of the economy, which are sort of a collection of what we can see and monitor on weeks and months to come, it's a positive. We've turned the corner. And that's an indication that Americans are really willing to get back out there and get this economy going again. So we're going to keep looking at the high frequency data. We want to make certain that that trend is continuing to go in our right direction because the economy relates to our investing, and our investing relates to our portfolios. So that's our job, is to say, hey, listen, we know unemployment is a lagging indicator. Rob, what are you and your team looking at as a forward indicator? And this is sort of a picture preview, sort of insight, what we see as important, that we see and monitor every day at Blanke Schein Wealth Management. And our final note is sort of a fun one. It's beyond sort of my time, if you will, but maybe friends and family at home would remember this. Again, in our morning journals, in our morning research, and our observations, there's some sort of prevailing news stories that sort of present themselves. And when you read it once, twice, maybe 3 times in several different outlets, in research, you kind of say, okay, well, that's something. At least it's something for trivial nature, if at all. And so today we're going to talk about Woodstock, 1969 August. Again, before my time. But maybe you guys remember it, if not all too well. And maybe some have even attended. So I've heard, and from those great stories. That being said, going back to 1968, one of the conversations in the morning research was that there was something that was discovered in America that called the Hong Kong flu. Essentially, it was devastating. It took out over 100,000 Americans and over 1 million worldwide. So that was a global pandemic back in 1968. It did spread all the way through the globe in 1969, but they still had Woodstock, if you will. Back then. In fact, they didn't close stores, they didn't close sporting events, they didn't close schools, they didn't even close the economy. One could say, 2 factors. They didn't know what they didn't know, and they didn't know what they should have done, because they would have saved more lives. And number 2 is the population back then. We had 210 million Americans at that point in time. Now we have over 328 million Americans. The population has aged. And so even though that Hong Kong flu back then, was really targeting those at low immune systems and 65 plus, like it is, the coronavirus is today. It's sort of same demographic. No one's immune from this. So the precautions that we're taking are very important. But it's just interesting to see that, history doesn't rhyme, as I said, but it doesn't repeat itself, but it certainly rhymes from time to time. You might read that story yourself, but more importantly, stay healthy, stay safe, wear your mask and personal protective equipment, and stay at home. And if you need anything, we're here for you. If you were just one phone call away, anything you need. And again, thanks for sharing with friends and family. We've received a lot of great, overwhelming feedback, and a lot of people are actually forwarding these emails on a daily basis to people that they want to share this message with. I'll just help you one step further. Send us the email address that you'd like, and we can add them to our email distribution list, and it'll help you save. I just had a conversation earlier with a client today and she's like, I send it to 5 people on a daily basis. I'm like, just send me the information. Our team will take care of it, and we'll make certain that we can save you a step. But more importantly, thanks for watching and sharing, and stay healthy and safe.